You guys can see this is like the trend line, the big downtrend. Gonna see if this thing can get a little weaker. Want to see a nice crack? Want to see a nice sell-off? Want to see a nice drop? It's almost there. It's almost there. It should be coming here. Should be coming. Anything underneath this yellow line is considered bearish. I gotta bring the energy up, starting up on day one. I mean, we just had a 3-day weekend. Throughout the weekend, I iced up my wrist, iced up my fingers, making sure that everything was all set, ready to go. Now I'm feeling excellent. Now I'm feeling absolutely superb at this time, ready to just talk about it all. Okay? So let's talk about everything that we need at this moment, making sure traders are all set as we always do. But we got to come out firing, and I hope you guys are on the same level as me. I hope you guys are on the same wavelength as me. I hope you guys are feeling exactly the way I'm feeling at this moment. Right now, I feel like a nice sloppy piece of bacon. That's what I feel like. I feel like a piece of bacon on a skillet. And right now, that skillet ain't burning. It's like getting like a nice little warm back massage, and the little grease behind me is just popping up my shoulder. Pop, pop, pop. And it's like a nice little, you ever sit in one of those massage chairs in a random hotel, and it's just feeling absolutely great. And now they flip me over with my butt up in the air, and now again, they're just massaging me down from my quads to my shoulders. That's how I feel at this time, traders. Man, it's a superb feeling. Let's talk about this day. Short week ahead. Earnings and economic data could drive stocks in a shortened U.S. trading week. Goldman Sachs and Morgan Stanley will headline the week's results when they report on Tuesday morning. U.S. December retail sales data due on Wednesday will also offer a glimpse into the health of consumers and whether spending tapered off during a critical holiday season. So traders, really at this time, we're just heading into earnings season. That's what the number one thing I want you guys to understand about this entire week. This entire week, we will start getting more and more and more earnings as the week goes on. The shortened week is not any day off on Friday. We just had off on Martin Luther King Day. So we do have Goldman Sachs, Morgan Stanley. Tonight we have Interactive Brokers. Tomorrow, Charles Schwab. We will start getting to the big earnings reports next week, which is going to be more of like Tesla, Apple, Microsoft, Meta, Netflix, Walmart, like all of these. These are going to be coming either next week or the following week. So make sure that you guys do understand that. So let's see what we have going on with this day here. It says stock futures fell on Tuesday as rates ticked higher and Wall Street awaited further data and bank earnings that will provide a better glimpse into the state of the American consumer. The benchmark 10-year Treasury note yield rose 6 basis points to trade just above the key 4% level. The 2-year and 30-year note yields were also higher. These moves come after central bank officials in Europe talked down rate cuts expectations. So basically, traders, what we have at this moment is we are seeing that the market in Europe is starting to fall slightly, which is bringing down our market. Now, why is the market over there starting to fall? Because they're talking down rate cuts. Basically, maybe people are getting a little too excited, saying rate cuts, rate cuts, rate cut, rate cuts. And they're saying, hey guys, rate cuts are going to be coming, but not yet. Rate cuts are going to be happening, but just not yet at this time. So a lot of traders are saying they're not happening now. They're not happening in March. They're not. And it's kind of killing a little bit of the enthusiasm, a little bit of the optimism here. So we're not missing much at this moment. All we're doing is trying to get prepared. Now, I want to talk about the current S&P 500. And before we get to this pick, let's go look at the SPY right now. The SPY at this moment, traders, when we take a look over on this play, the S&P 500 is right next to those record highs still. We know that the S&P, we go back over towards a weekly time frame, our old high is 480. 480.40 on the exact penny is the highest the stock market has ever been. Now, over the last few weeks, we have come up towards around 480. We have gotten near 480, but we have not been able to break it. So you guys can see we've gotten up to the price of 477. Then we came on down. Just on Friday, we came up to 478. Now we're gapping on down. You can see we come right on up towards these 480 marks, and we just can't snap that 480 mark just yet. Here's 475 fall, 476 fall, 477 fall. Here comes up to 478 fall, back down to 474. That 480 mark is tough. But once we can break that 480 mark, that's where we're really going to start getting a very nice rip and run and rally. So let's look at today. What I want you guys to do, this is going to be a little overwhelming, I think, at first. But everyone take a look at this play. This is in a 30-minute time frame. So I like looking at the S&P 500. I like looking over on blue chips a lot of times in a 30-minute time frame. Now, let me explain to you guys what you guys are looking at. Anything in purple is what we had last week. Okay, so anything in purple is last week. I just wanted to leave it here so you guys can understand what we have. You guys can see how we had a beautiful downtrend with an uptrend, and then we had this nice wedge pattern. Then we had another ascending triangle wedge pattern formed. So you can see we had our initial breakout, then we set ourselves up into another breakout. And what I'm really thinking is we're setting ourselves on up right now in this wedge. So this is how I just wanted to make your life as simple as possible. We could see where we want to be getting involved into these plays. You could see we had a wedge pattern, which led to a very big squeeze. You could see last week, again, we had the ascending triangle pattern with our next line of support. And now focus here. Now we essentially just have this very nice wedge pattern where we do have our uptrend from last week still playing an effect, still playing a role in this week's support. And we do have a new downtrend right next to that top 478.50 resistance. So I just wanted to leave last week here so you can understand and see last week. But if we wanted to at this moment, we could just say, all right, now that you guys start understanding this, let's start getting rid of last week a little bit, get rid of that downtrend, get rid of this old line of support, get rid of this ascending triangle pattern. Cool, we don't really need it. Now, as you guys can realize, we do have a new setup right now. Now, what I do like about this setup is that we do have a lot of old resistance, which should be holding up as new support. So as you guys can see, if we add some arrows right here, this is going to be a very nice support or resistance line, depending if the S&P 500 is above or beneath it. So this is going to be a very nice area where you can see resistance, resistance, resistance. You can see here comes the breakout. Now, what else can you be taking a look at? You can also see this is where we also had a very nice bounce play. And this is definitely going to be holding up as some sort of key role today. You know, this is definitely going to be an area that's probably going to be, I think, like the middle ground. If you go underneath it, I think you're going to go back above it. If you go above it, I think you could easily come back on down towards it. So this is kind of like going to be that middle ground area right around that 475-ish mark, which does make sense. Now, the S&P 500, if we do start getting weak at the start of the day, watch that bounce play right around that 474 mark. If we do start spiking at the start of the day, watch for us to run all the way up towards around that 476 area. So this is what we want to be focusing on this wedge, on this setup, looking for this potential tighter and tighter and tighter move and then a squeeze. So let's go back to our morning newsletter and let's read our morning newsletter here so that we're all set. It says, game plan today, the S&P 500 has been pretty predictable lately, which is awesome as we can clearly see our old alerts off the wedges and trend lines work perfectly. Now, as we move into the new week, I see new wedge starting to form. Today does not look like a breakout day. Today looks like a day it will touch bottom support and bounce back to top resistance, which is 100% okay with me. I do not mind a day where the support and resistance lines hold strong, which only gives us more confidence when they break. Calls look for a spike to 477 and puts look for a drop down towards around 473.50. So today is not a day that I'm expecting any sort of monster breakout or monster dump. I'm really not expecting that right now. I am more expecting at this time, traders, that we are going to be seeing like more of a consolidation day, that we're going to slightly move up, slightly go down, and then kind of move sideways. Now, even if we have a slight move on up, or even if the S&P 500 does move sideways throughout the day, does not mean that NVDA can't go up even higher. You guys already know, NVDA has been the hottest stock of 2024 so far. It has been nuts. When you guys take a look over on NVDA, we have this amazing ascending triangle pattern, which is now leading towards this very big squeeze, very big pop. And we basically have a bull flag pattern at this moment. So NVDA has this bull flag pattern spiking all the way on up if we can break through 550. What I would like to see out of this play is I would love to see NVDA be able to break 550 and run on up to 575, 580. My target on this is to break through 550. My target on this is to be able to get up towards around that 575, 580-ish mark. My target is I want to see this thing be able to squeeze and rip and run and kind of get that last maybe 1 to 2 week hurrah before we start getting any sort of strong pullbacks and before we start getting any sort of strong drops. Right now it is January 16th. I do think we will start seeing some pullbacks near the end of the month. So I still think we still got this week. I still think we got next week to be able to see some strong pullbacks and start seeing some, nice rips and runs here. We just got to stay underneath this yellow line here. That's going to be the most important thing. And underneath the yellow line, we are bearish, bearish, bearish where we could possibly get our next leg on down. It all already starts to look like it's starting to turn towards this next leg on down. And there's nothing wrong with just taking money when you have it. There's nothing wrong with scalps. There's nothing wrong with saying, ooh, I'm up 80 bucks. Let me lock that in. Ooh, I'm up 200 bucks. Let me lock that in. Ooh, I'm up 1,000 bucks. Let me lock that in. Right? You know, green is green, money is money, profit is profit. There's nothing wrong with taking your gains when you got them. Here comes again, yellow touch. Let's see if we get back above it. A little bit of rejection right at that area. And you guys can see this is like the trend line, that big downtrend. As long as we hold above it, it's still considered bullish. We're watching to see if we can stay underneath this yellow line. If we can stay underneath this yellow line, we do have a lot of room to fall. So we are going underneath this yellow line once again, getting a little bit weaker. Can we actually be able to get a confirmation candle underneath this yellow line? Confirmation candle slightly underneath this yellow line. We know that yellow line is basically our support slash resistance area. We hit it, we fall, we hit it, we broke, we fell underneath it. It's like basically our area that we want to be able to stay around. I'm going to jump in, doing puts, going to see if this thing can get a little weaker. See if this thing can start fading on off here. So my goal here is to try to make, $200 to $500. If again, the S&P 500 can crack its VWAP, that would be huge for us. And if the SPX can start coming back on down towards around the low of the day, that would be absolutely huge for us. So I am seeing the SPY get a little bit weaker. I want to see the SPX basically get this dump. This is my first trade of the day here. And I'm watching to see, are we going to get any sort of strong sell-off drop, any sort of like that move right back on down here. Don't want to risk again going in the red. I want to make sure we stay underneath this yellow line. And as long as we do stay underneath this yellow line, things are absolutely a-okay. But that's basically the way that you guys need to trade this. Understand this. As long as we stay underneath the yellow line, you're absolutely a-okay. And remember, the yellow line is the massive uptrend that we've been holding for the past 3 days. So anything underneath this yellow line is considered bearish. So that's what we're looking at. Want to see a nice crack? Want to see a nice sell-off? Want to see a nice drop? Now it's still just trying to hold, looking for a nice little sell-off on down towards around these bottoms. Let's get that sell-off. Let's get that drop. Guys, starting to get a little weaker. Little weaker. Come on. Let's get the fade off. Get that drop. Let's get that drop. Let's get that fade. It's almost there. It's almost there. It should be coming here. Should be coming. Guys, here it comes. Here it comes. 200, 200, 150, 175, 175. All right. Traders, not loving it. Not loving it. Just going to take 150 here as we're next to the VWAP. Not loving it. Not in love with today. Not in love with this, action here. Take 150. Just be like, all right, free 150 bucks. I got to bring the energy up starting up on day one. You guys can see this is like the trend line, that big downtrend. Don't want to risk it going in the red. We hit it, we fall, we hit it, we broke, we fell underneath it. Still just trying to hold, looking for a nice little sell-off on down towards around these bottoms.